Good evening, everyone. Welcome to our seminar this Tuesday evening. We've got a good one for you. How to make crazy cash flow with today's high interest rates. We're going to delve into things that you can do to mitigate those sky-high interest rates. Well, they're not really sky-high. They're sky-high for now. Historically, they're not that high, but for investors who've just got into the game in the last couple of years, they are high. So you definitely have to keep a watch at your numbers to make sure things don't get out of hand.
Yeah, Tim and I talk about this all the time. It's a factor, it's part of our business, Tim. Owning properties, you're going to be coming across interest rates that go up, go down, and we have to deal with it. And we have to be proactive, and that may mean a few things which we're going to go over tonight.
All right, we're going to get right into the meat of our seminar right now. So our crew real estate investment, we do these seminars, like I said, at the beginning every 2 weeks for the new people there. We've already gone through who we are, what we do, and our market update. Now we'll get right into the seminar, how to make crazy cash flow with today's high interest rates. The first thing we're going to talk about is this couple right here behind the screen here. They are making crazy cash flow even in this market.
And they were nervous. So when they came to us, it's Neil and Alana. We've been working with them for about 3 years right now. When they called us initially, they came to one of these Zooms and they reached out to us straight after the Zoom, and we know people are keen to get going. And they were in a situation, Tim, that they had a condo in Bridgeland that was underwater. They were living in it. They wanted to move out, but they couldn't rent it out to cover their costs. And so we had to work out with them how we're going to move forward. And at the end of the day, we actually decided to move them out of the condo and take a loss per month, because if they sold, they were going to lose, Tim, 20, 30,000.
Yeah, the actual resale market of their condo had gone down so far that they didn't want to lose all that money.
But they wanted to become investors. So we actually got them this house in Huntington Hills that you've got, that's behind them here. They actually got an off-market deal. A lot of our properties are off-market deals. They got it from another crew investor that lived there for a short period of time, was starting a family and moved out of it, and was happy for us to sell it to this couple. Now, this was going to bump up their living expenses, Tim, not dramatically, but it was going to bump them up. And so what they did to start off, they rented out the basement. And this is where we say, Tim, sometimes you have to take that sacrifice, or you just have to go the distance to make it all work. And so they rented out the basement in this home. It wasn't a suited property. It was just like to a student. And at that time, it was only for $1,000 to offset their costs and to help them with the negative condo situation. And then after this property, we went to Winston Heights and we picked them up a property for $415,000 in.
It was a suited half duplex.
Suited half duplex in Winston Heights. And I called them today just to work out all of the costs and what's going on. So just to give everybody the numbers out there, the home that they're standing in front of here is now rented for $1,500 in the basement. They live upstairs. The duplex is rented for $2,000 up and $1,650 down. Okay, so that's $3,650. And they locked in 2 years ago on their interest rate. So they're doing good with that. And they're making enough cash flow off that. Now they're looking to buy another property. And the condo, since 4 months ago, they turned it into an Airbnb, and it was renting 95% of the time for $150 a night. So $150 a night, like $4,500, something like that. And then during Stampede, they actually rented it out for $350 a night, each night of Stampede. So are they cash flowing? Yes. Does it take work? Yes. And now they're looking to buy their fourth property moving forward and just doing another suited property.
Yeah, and what they did, they decided to act proactively with their rents. They know that when their mortgages on these properties come up, they're going to be at a higher rate. So they know their mortgage costs are going to go up. So what they've done is they've increased the rents on their half duplex. They've turned their condo into an Airbnb. So they're proactively raising the rents on these things, anticipating the mortgage payments that they're going to have in a year or 2 years or 3 years, whenever their renewal is up. And they know, given today's current rates, that they're still going to cash flow quite a bit because they've raised the rent so much.
Yeah, and we're going to go over what each property class should rent for in today's market, because most of us are well off what current rents are. So we're going to go through that in a little bit, but we just wanted to show you guys an example of a young couple that came to us that were stuck. They were in a place, they didn't know how to move forward. And we've been there every step of the way with them. And we're actually meeting them next week to work out how they're moving forward. So is it possible? Yes. You just have to get out of your comfort zone, and you need the right team around you guiding you so you know what you're doing. The quick question in the chat here. Thank you, Abby. Is it okay to invest in the name of a corporation or personal name? Fund currently sitting in a corporation account. Tim?
Well, Danielle will probably back me up on this. If you go and try to apply for a mortgage through your corporation, you're going to have to personally guarantee it. So you can do it, but you're personally guaranteeing it. So you're going to have to give all your personal financial information as well. Unless your corporation is making a vast amount of income, which most of us in real estate, we just have them as holding companies, so they're not really generating a ton of income. The banks will not let you qualify just on your holdings alone or the cash that's in your business. You actually have to be generating income, which is why they get you to personally guarantee it, showing your current income as the way you're making money and the way your corporation's making money. So you can do it, but it's going to be personally anyway.
Yeah, and just to clarify for the new people on the call, if you're just starting off in investing, we wouldn't recommend going out to get a corporation, because as soon as you do, to run the taxes and use an accountant filing, everything like that, it's going to cost you minimum $2,000 to $2,500 a year. And if you're not producing that cash flow, it's just a waste of money. So we always say, buy the properties. We can always roll the properties into your corporation later on, but you need that cash flow coming in. And if you've already gone one step ahead, because we know other investment groups would tell you to put it in a corporation, it's fine. It's just, a little bit early.
Yeah.
Okay. We'll leave it at that.
So where are we headed before we get into all these suggestions in making the crazy cash flow? Well, we know that interest rates are up. They're up so much from last year or 18 months ago that most people's mortgages have doubled or even tripled, depending on how low of a rate you had when you went into this mess. So interest rates are high. It's a situation where we have to live with. So we're going to give suggestions throughout this presentation on how to deal with that. And what we always say is, it's something you can't control, so you have to work within it. You have to restructure your business so you are cash flowing, and that's what we're going to discuss today. The next thing is housing supply. As I mentioned in our market report, our housing supply is very, very tight here in Calgary and in Alberta, in Canada in general. So you have to deal with that as well. Sometimes you may have to sell one property in your portfolio to subsidize the others if that's where you're at. And selling now, you're going to get a premium price.
Yeah, you will. Everyone's maxing out. We had a call the other day from one of our investors that owns in Candy Meadows, and we actually said to him, you know what? You're never going to get a better price than now.
Yeah.
And that's the truth. Next one, Tim.
Government decisions, carbon tax and clean fuel standards. Danielle was talking about, will the economy slow down enough for rates to come down enough? I think that a majority of our inflation is in part government generated. The vast amount of government spending and borrowing that they did to get us through the pandemic and after, that contributed to inflation. The carbon tax and the clean fuel standard, that's raising the price of fuel, and everything that we buy and use in this country is transported to us from somewhere. We don't all have the luxury of having a garden in our backyard, Azad the gardener here, but the extra taxes on top of the regulations are driving the price of fuel up, which is driving the price of everything up. So it's a situation that we're living in, and we have to deal with it. We can whine about it all we want, but the best thing to do is restructure your business so that you can be profitable within the system that we have. Third one, or the fourth one, immigration.
Yeah, immigration. I mean, the stats were out just the other day. We're already at 37,000 new people to our city already. And I think that topped last year. So where's it going? I mean, I love it. I was saying on the last webinar, I was on 17th Ave a couple of weeks ago, and I couldn't believe the diversity of people that we have in our city. I think it's awesome. And I think that it's just going to attract more and more people. And we can handle it. We have the infrastructure here, as we've mentioned. We've got jobs. And you know what? We're better off for it. And we live in a beautiful city, so it's going to continue. And as mentioned, Calgary is doing way better than Edmonton right now, just because of that infrastructure that's going on in our city.
Yeah, and the final thing is inflation, which I touched on already. There's a ton of factors that are driving it. The latest inflation numbers came in. We were sitting at 2.8 or 2.9% for last month. It's a positive thing, but again, what's really driving it is the price of food and the price of fuel. So we need to get a handle on that, or we're going to see inflation continue to go higher. But again, it's something that the little investor can't really control, so you have to learn to work within it.
Yeah, and the reason why we're saying that is, you know, we deal with investors that are getting into the game, and some people don't choose to take action. But you can't let things like interest rates, especially if you're working with the right team, you can't let that give you the excuse not to take action. There's ways around that.
Yeah, and it's not all doom and gloom. What we are preaching right now, the number one thing we're preaching to our clients is to be patient. Everybody wants to run out and buy that perfectly suited property at the great price, you know, that'll be in a neighborhood that gets great rents. Well, you're competing with, you know, hundreds of other investors that are looking for the same thing. So you have to be patient. And if you use our system of finding the right property in the right location, we can pretty much, well, we won't guarantee it, but we can pretty much assure you that you're going to have a successful real estate investing career for years to come.
Yeah, the worst thing you could do is rush off and get caught up with everybody else and make that mistake. I mean, you don't want to overpay for the property. You want to run your numbers. And we're very strict on what types of properties are going to work. We've seen some properties that we scratch our heads and we're like, why is someone paying that much for that property? But that's the way the market is. There's people out there that can't find rental properties. There's people that out there that will just pay whatever right now. That's what kind of market we're in. So yeah, you want to be patient. You want to educate yourself. This is the best time. So I applaud everybody on the call tonight. This is actually the best time, Tim, to educate yourself, understand what's going on, understand what makes the numbers work, what types of property make it work, and how you can succeed as well.
Yeah, and we have a question right here. How would a single person on one income go about purchasing investment property? There's many ways to do it. We're going to talk about different strategies to do it as we move on. But if you only have one income, then you figure out, you go to a mortgage broker, you go to talk to Danielle, and you figure out what you can qualify for. If you can only qualify for $200,000, then maybe you're in the condo market.
Yeah.
We have clients that are having huge success in the condo market. Graham recently bought a 2-bedroom condo in Arbor Lake for $190,000. And what kind of rents is he getting on? He's getting like $2,000 a month
Crazy
rent on a 2-bedroom condo in Arbor Lake. So that's more than covering his costs.
Yeah.
And so if you got to move down an asset class so that it fits within your budget, then you have to do it. And there's other ways. There's joint ventures. There's raising capital, many different ways. There's also alternative investment strategies that you can do that we're going to speak about in the next couple of slides, that you can do for none of your own money.
Yeah, we would recommend this book that that Mustafa's holding right there. I've got a copy of it right here, and we're not trying to sell it, but we're just telling you that when I moved to this country, I didn't have any credit and I didn't have any money, and ended up buying 6 houses. So you can definitely do that if you're on your own, and sometimes it may take doing it with someone else as well.
Yeah, and Mustafa there, that's his first rental property he's standing in front of. It's just a little townhouse in New Brighton. He didn't start with a big suited property in one of the best neighborhoods for rental properties. That was within his price range, and it was 315. Yeah, so he got a 2-bedroom townhouse with an attached garage for $315,000. And that's his first one. That was within his income, so he started small.
Yeah, so there's multiple ways. It will take a meeting to help you out there, but you're doing the right thing by being on this call. Crew real estate investment strategies to improve your cash flow. So, okay, and this is where it comes into being creative. At the same time, when people own multiple properties, Starting off, yes, you have to pick one strategy, but over time, the whole aim of investing in real estate, or the whole goal, is to repurpose or reuse those funds you're using as your initial deposit. So whatever seed capital you have, wherever it's coming from, if we have to teach you to go get lines of credit or raise money off friends and family, or do whatever, or use your RRSPs, Tim.
Yes.
There's many, many ways you could raise the money if you want to get into real estate. But you have to choose a strategy. And buy and hold, we always say this, it's the most boring way of investing in real estate, but it will make you the most money. And we'll tell you why. Buying and holding is just buying a property, and you may be doing a move up program, like the person who just asked the question on how do I get in if I'm on one income. You might buy a small property. We were saying this today. You might buy a little condo, but the condo you choose, we know is going to rent out and cover its costs when you move out. So now you own one property moving into your second. And if you're getting into investing, and if you're investing with us, we believe that every one of you should have $1 million worth of real estate. It doesn't matter if you're into stocks or you're into crypto or Bitcoin or whatever it is. We don't care what you're into. We're not going to even compare the asset classes. We just want you to know that our aim for every one of our investors is to own at least $1 million worth of real estate. So buying and holding is simply getting the 3 rates of return. That means you're getting the cash flow from the rents, the mortgage is getting paid down, and guess what? The property's going up in value. And the best thing about real estate is that this magic thing happens. It's happening right now, okay? And we've been through where the magic wasn't happening, right? And we can tell you the best thing about buying properties through us, it's not always rosy. We need to stress this. We got an email from Toronto today. It's not rosy out there right now. It's terrible. And Tim and I have been in those dark days, but if you're buying the right properties and the rents are covering the costs, you still have that rate of return that the mortgage is getting paid down. Your property may not be going up at that time like it is now, Tim, like it's going up crazy. But when you still have cash flow and the mortgage getting paid down, even that is worthwhile, because you're going to ride that cycle out, because properties go through cycles, and that magic thing will happen again. It happens every few years, Tim. We know it happens. In Calgary, the last cycle was 2014. The cycle before that was 2007.
Yes.
Right. So there's been ups and downs through there, right? But they're the cycles, really. And now we're going through one, and this is going to continue, we see, for the next three to 4 years at least. But you have to own it. You have to take action to actually reap the rewards from those property cycles. And if you're getting paid to do it, meaning cash flow, and your mortgage is getting paid down, that equity gap just gets bigger and bigger, and you get in a better position to leverage up, to refinance those funds, to buy more properties. So that's buy and hold.
Well, one more thing about buy and hold. I think we're going to have to adjust our $1 million in real estate that people should own. John right here, he's standing in front of his second rental property. He bought his first one about 18 months ago in Canyon Meadows, a legally suited property in Canyon Meadows for $550. Now, this is just a single guy. He's young. He's in his 20s. He just recently took possession of this one in Fairview that's behind him, and he bought it for $515 or $520.
Yeah, just last month. He
owns over $1 million worth of real estate. And how did that first one help him qualify for the second one? Well, he's got his income, but the basement suite, because it's a legal suite, that counted toward his income as well, and that helped him qualify for this second property.
Yeah.
So he's over $1 million in real estate in a matter of less than 2 years.
Unbelievable. And to tell you about John, he didn't even want to buy these houses. He didn't even want to buy this. You know what John wanted? He's a young IT guy, right? John wanted, Tim could tell you, he wanted brand new in Auburn Bay, or not McKenzie Town, Auburn Bay, Mahogany, all those areas, right? That's what he wanted. And we're like, no. You have to get suited properties. You have to get them in a city. And on each property now, even this one here, it's probably worth $50,000, $60,000, $70,000 more than he paid for it just a month ago, once he legalized the basement.
And he was looking at, like Azad said, the newer product in Auburn Bay, Mahogany, the pre-built suited properties that are built by the builders out there. So they come with an existing suite in the basement, but they're all side by side, 2 stories. The basement suite's about 550 square feet. And those were retailing for around $750 when he wanted to buy them. We said, you know what, they're probably going to come down in price. And right now we have a realtor in our office who he specialized in flipping those things between clients from Toronto. And now the end person is stuck with these properties. They paid about close to $800,000 for them, and they're not worth $650.
Yeah, they're not worth $650, and they've come to us to try to sell them, and we're like, we would not sell them to our clients simply because they're the first things, the newer communities, the newer product, they're the first things to go down in value, especially when borrowing costs are so high to buy brand new. When you're up around the $800,000 range for a brand new, newer starter home, I mean, the interest rates on that and the payment, not everybody can afford that. So just because of that, property prices in those areas will come down. Now, the reason why this property, we chose it for John, it's 15 minutes to downtown, it's 5 minutes to Chinook Mall, it's 2 minutes to the LRT, and it can rent out and cover its costs. Even if the interest rates go up another 2%, he's still well off, and that property, they're flipping in there. We've seen in Fairview, they're flipping in there for upwards of $700,000, and he bought for $515,000. So it's only up, and up, and you have to make sure you buy correctly or you get stuck. And that's what we've seen people do. They go and buy the brand new. Sometimes you have to delay gratification to get what you really want. Moving on to flipping, I know we just skipped over to pre-construction just then, but flipping, you know what? The whole thing about flipping is just putting money back into your pocket and using that to go again. But at the same time, it should be doing a little bit of both. We know our good flippers here that just finished one, Tim, in Willow Park. They made just over, was it 200,000? 300,000. But at the same time, they've also got a holding property in Canyon Meadows on the go, and then we had already bought them in Parkland
for their next flip.
So they've got multiple strategies going on, and we just keep them moving. So the only reason, unless you're a renovator, the reason to flip, and you could do long-term flips, you could add value later on. Even with the condos downtown right now, I know that the older product, Tim, you've been in a bunch this week with Deb, the older condos are selling like for the 250s or just below, and the ones that have lipstick or just been updated, they're selling closer to 300. So there is a massive gap there where if you were to add value, and Tim, when we say add value, you could just be painting cupboards and stuff like that.
Yeah, and throwing stainless appliances in there, putting in some baseboards and vinyl plank flooring. So the updating in some of those smaller places like downtown condos, it's not going to cost you a lot of money. So the flipping can generate a lot of cash, so you can go and get a long-term hold.
Yeah, so for you to do that, you're producing enough income, and you have to look at, we always say this, you have to look at your portfolio as a whole. So if you have a property right now, and Tim was just saying this, we got an urgent call this morning, someone wants to sell a property in Shaughnessy.
Yeah.
And so we were figuring that the loan is coming, and this is going to happen. There's going to be many loans that just come up and people have to renew. I've got one in Tuscany coming up at the end of the year that just, the interest rate is just going to wipe out the cash flow. But you have to look at your portfolio as a whole, and you have to understand that you have to maybe do a few different things to get by this time, right, and make it right. And if you have to offload that property, you offload it and put your money into a different property that makes sense. So hopefully that makes sense. If anyone has any questions, please put it in the chat. We'll be happy to answer those.
Okay, we'll do development, duplexes, fourplexes, multifamily. It's a great way to increase your cash flow. The best way that we see people doing it is they get a duplex and they legalize the basement suite, so they've got a legal duplex. Then they get the other side, they legalize that basement suite, and they own a legal fourplex, pardon me. So the cash flow on 4 units will be a heck of a lot higher than just one. Down below that is commercial. Commercial generally requires a lot more capital to get started, so it's not something we're going to speak a lot about today. But once you are in the commercial space, your cash flows can be huge. And with triple net leases, the tenants are covering You know, they're covering the rent, all the expenses, the taxes, and maintenance. So with commercial, you can really be hands off, and your tenants are, you know, generating the cash flow for you.
Yeah, we'll go to the next.
Go to the next slide. Some alternative investment strategies. This is what we were speaking of when we were talking about the first question we got today. Some of these strategies you can use to increase your income if you can't qualify for a mortgage right now.
Yeah, so Airbnb, if you're thinking, well, how do you do Airbnb if you don't own a property? You actually don't need to own a property if you're doing Airbnb. You can go out there, you can sublet off a landlord, so you can go rent a property and get them to agree that you could sublet it out as an Airbnb. You might be thinking, well, why would they let them do it? Most of our investors that do a lot of the Airbnbs do it this way, simply because then they don't have to get the mortgages.
Yeah, it's called Airbnb arbitrage if you want to look it up. So there's tons and tons of literature on it.
Yeah.
And when you are doing this, you have to make sure that you're in a building or a neighborhood that allows it. I know a lot of the buildings downtown Calgary are starting to change their condominium rules that you can't have Airbnbs in there, but there are also many that do allow it.
Yeah. Agreements for sale, this will be coming up for sure. So this went out of fashion, Tim, probably around COVID time. Yeah. And now it's going to come into fashion just because interest rates are going up and people won't be able to, unfortunately, afford their properties, their rental properties. So what it is, agreements for sale, AFS, is you approach a landlord, homeowner, and you agree to take over their mortgage. So even if their mortgage is, the interest rate's higher, you would take it over for the rest of the term. And the reason why we love agreements for sale, you could do a number of things with it. You could do an Airbnb with it. You can do a rent to own with it. You could actually do all these things on this list. And the other thing you could do with it, you could flip it. So you could actually get an agreement for sale. You're not qualifying for a mortgage. You're just taking the mortgage over, but you agree to put a mortgage in place when that term is up or a set date that you set. But you could add value to the property and you would have all of this in that contract. So it's a great way to get into real estate investing and not have to qualify for a loan.
Yeah, the bottom two, lease options and rent to own, are similar. The gentleman in this slide, Mark, he is a rent to own expert. He's had quite a bit of success doing the rent to own strategy. What he does is he finds potential rent to own tenants through his ads, and then he will go out and purchase a property while those tenants are there, because they're the ones that are going to buy it after they've rented for the period of the rent to own contract. And so they're getting a property that they want. They're going to look after it because they know it's going to be their home. And Mark gets his money through an upfront fee and then rent credits along the way.
Yeah, and we've seen deposits on lease options, rent to own, all the way upwards of 45,000, from 5,000 to 45,000. So it's a huge way to make profit straight off the bat, and then have a tenant in there that's eventually going to either buy the property, or they have the option to, on a lease option, to walk away from the property.
Okay, so we'll move along. So what can you do to increase the cash flow in the high interest environment that we're in right now? Well, there's some things we can't control. We can't control what the government does. We can't control interest rates, really. We can't control government policy. So if not only the Bank of Canada raises rates, but the government can raise taxes on things like the GST and carbon tax, which raises supply costs, which raises, any maintenance you have to do and things like that. What you can control is the revenue side of the equation. We've already talked about that, about how you can raise your rent, work with your tenant so that you can move your property from a negative cash flow position into a positive cash flow position.
Yeah, so one thing I just want to go over just roughly here on rental rates, because they have gone up. So I just want to explain to everybody in the different classes of real estate, what the average rents are. I went on Rent Faster. So when we're looking at rental rates, we're buying properties, we're comparing apples to apples. So we want to stress this. What does that mean? It means that you can't compare a house on a busy road compared to a house backing onto a park or into a cul-de-sac. You have to compare renovated properties to renovated properties, or updated properties to updated properties, or rundown properties to rundown properties. So when we're looking at the average rents, a studio apartment right now, and these were taken downtown Calgary, is roughly $13.50 per month. Okay, a 2-bedroom used to rent for that. Now a studio rents for that. A 1-bedroom is on average $17.50, and a 2-bedroom on average right now is $19.50. And when we say on average, the new rental buildings, so you may see some buildings downtown that actual rental, the whole building of rental units, and they were purposely built. Those newer condos, and they're smaller because they build them smaller, on average, they're renting for $2,700. Okay, so the average 2-bedroom rents for $19.50, but a brand new one, you would say, Tim, roughly, goes for $2,700. Yes, that building may have some amenities that, you know, the young people want, but that's what they go for. Now, a 2-bedroom furnished apartment, and this is what we have to stress, because furniture doesn't cost a lot. You can find furniture on Kijiji.
You can rent furniture. We have some of our clients renting furniture, and we walked through a house with one of our clients, and he goes, "Yeah, that night table, that's $5 a month. That coffee table, that's $10 a month. The bed there, that's $20 a month." He was actually naming the cost. All the furniture in his suite was rented.
We couldn't believe it. We couldn't believe it. Anyway, so the reason why we're going over the rental amounts is because you may not be charging enough rent. And as we said earlier in our real estate tip of the week, if you didn't see it, it will be on our YouTube channel, Crew TV. We're not here to gouge the tenants. We're not here to be jerk landlords. We're here to just be fair and explain our costs have gone up. Everything's gone up, double. Like our interest rates have doubled, so our borrowings doubled. So we have to explain that to the tenants and say, hey, you know what? We have to raise rents, or I can't even afford to have this place that you're renting off me. So that's just how it is. So furnished rentals right now for 2-bedder is going for $2,900 per month, which is amazing. And the only thing with furnished rentals we want to tell you about, try lock them in for a year, because most furnished rental properties are, you know, 3 months, 6-month leases, and then you've got turnover. Townhouses, which we can't believe, because we used to base our numbers, Tim, all the way on 1650. Now townhouses are getting on average $2,300, and we sourced all over the city for that. That would be with a garage, not a carport, but with a garage. And then basement suites on average now are going for $1,500, and suited properties main floor on average are going for $1,950. And as we mentioned, our clients Anil and Alana that were on that slide rented their main floor, and this is a half duplex for $2,200. So $1,950 for a main floor is pretty conservative. And the funny thing about the rents, it doesn't matter if it's a detached main floor house or attached main floor house, the rents are the same. So tenants don't really care if it's attached or detached, but when you buy a detached compared to attached, the price difference is roughly $100,000 to $150,000. So we want to stress that to you guys. But of course, on detached team, you get more appreciation. So it weighs itself out. But if you're just starting off, that's not a bad thing.
One class we didn't talk about was executive rentals.
Yes.
They're back. So people with executive homes that were using them as rentals before, they're changing them back into executive rentals, putting the nice furniture in there. They're getting contract people in for the oil companies, even tech contract people that are coming in for a set period of time. And really, depending on how nice it is, how nice the neighborhood is, the sky's the limit on executive rental amounts. We've seen people renting them for upwards of $8,000 a month. So if you're in that space, then you can rest assured that they're back again.
Yeah, the most expensive rental in the city right now is a $16,000 per month property, Northwest Calgary. It's on Rent Faster. So anyway, executive rentals are back if people decide to rent out their homes.
Yep.
So we just wanted to go over that for everybody out there. Once again, we didn't talk about student rentals. I know, is that coming up, Tim? I think it is coming up in one of the slides.
Yeah, it is coming up.
Yeah, it is coming up. So we'll talk about that as well.
Okay, another thing you can control is your expenses. Some people who have a property manager managing their properties for them, if you can't afford that 10% and you have to take the management back and do it yourself, then you got to do it. You have to do these things if you want to, keep your rental portfolio through these tough times. I know I've never used a rental property management company. Azad has in the past, and then he took some of his back, or his joint venture partners took them back. But it really does cut your costs when you're not paying that 10% a month to a property management company.
Yeah, and we want to stress that because no worries. We want to stress that because property managers, no one's going to look after the property as well as you are. And if you're following our landlord system, you don't need a property manager. I mean, we've got Air Canada pilots, we've got doctors that said, no, I don't want to property manage. And then when we show them our system, which is part of when you do buy a property with us, we give you that as a must, because we want this to be successful. They've continued to manage those properties themselves. So we want to stress that it's not as hard as people think, and all of those horror stories can be. We haven't had any horror stories from all the clients over the years.
That's true.
Since we had horror stories. So,
hey, we've got another question in the.
Okay, next question.
Let's see. It says, I'm not sure if condo is a good investment. The problem with investing in condo is the condo fees. They increase every year. I own an apartment in Edmonton. And I paid $247 and $215 and tried selling it for $180, and the condo fees are now $510. If I try to rent it, the rent will not cover the cost because of increased interest rates and condo fees. Yes, you may run into this problem if you're living in a condo that's maybe not in high demand. The condo fees can go quite high. What we do when we're out shopping for condos with our clients is the condos that they buy that they're going to turn into rentals have to have some sort of wow factor. You cannot just buy a unit in a high rise that's looking at another high rise about 20 stories up.
Yeah.
There's nothing to differentiate that from all the other condos there. You need to have a view, or you need to be close to, 17th Ave, the entertainment district. You need to be close to a hospital or university. There needs to be something that will add value to the person that's living there.
Yeah, we always say, would you live in it? And sometimes, some of our clients, they come to us, they've got properties already, and we just tell them they're the first properties to be sold.
Yeah.
If it's hard to rent out, it's frustrating. Who wants a property like that? It shouldn't be hard to rent out. And if you follow us, you'll be buying the right properties, and you won't have that problem. You won't have that stress, and you shouldn't have that stress as a real estate investor.
Yeah, and there's no investment strategy out there that is risk-free. There is risk with investing in real estate. You may purchase something that's in a bad location, or that a neighborhood that turns bad after you've owned the place for a number of years. So what you got to do there is you need to be proactive again. You may have to sell that and move the cash into another property that's in a better location.
Yeah, unfortunately, that's just the answer with that one. And just remember with condo fees, yes, the condo fees are high, but you have to remember condo insurance is cheap. Like condo insurance is like $300.
And your heat is usually included.
And so your heat's included. So when you guys actually do the maths, you have to understand this. I know as a landlord, you have to factor these numbers in for sure. We're not saying that. But if you go buy, say, a half duplex, your insurance now, Tim, would be $1,500 a year, right? So you're saving $1,200 just there from buying a condo compared to a smaller detached home. And then the heating, you'd have to, depending who's paying for that, you have to factor that in as well. So just remember those little things. People don't really realize that on condos. And the difference, yes, it is a little bit more, but then you've got peace of mind with a condo if it's well managed.
Yeah, and a lot of our investors that do get into condos and townhouses, they don't want to deal with the exterior maintenance, so their condo fees handle that for them. If the roof goes, there's a reserve fund that every condominium corporation has that will cover a roof replacement. That's a whole thing about doing your condo doc review when you buy the place, but they're not maintaining the driveway or the snow removal or the landscaping. That's all covered in their condo fees. So they don't have to have those surprises come up. Say, if you're in a big condo building and there's no water heater in your unit, so you don't have to cover that if the water goes.
Yeah.
Anyways, that's
I just had a roof go on one of my properties and have to do the roof now. And guys, with all these costs that do come up in whatever you own, it could be a special assessment on it. It's just part of it. You have to budget for it. You have to allocate funds into a bank account so you have it there. We always say it. We say it in our book. As soon as you have to pull money out of your back pocket and fund your investment property, your days are limited as an investor. I mean, we all want to go on more vacations. We all want to go to more sporting events or concerts. Have you guys seen the prices of concerts lately? Ridiculous. My kids want to go to Drake, and I'm looking. I need to get a mortgage just to take them to Drake. So I'm telling you, the cost of these things are just going up and up, and you have to run your business smartly, and you have to factor all of these things in. And we help you with that. It's as simple as that.
Yeah, and the final thing is don't quit your day job without a plan B. What do we mean by that? You have to be able to, your rental property business has to be able to fund itself to a huge degree before you can think about quitting your day job. We run into a lot of investors that come to us, they don't own anything yet, and yet they want to live off cash flow in the next 2 to 5 years. We can tell you that, well, it's possible. The odds are it's not going to happen to you. So you have to have a source of income while you're building your portfolio, which most of us do, and most of us did. You're working at your day job to keep your day-to-day expenses, funded, but you're also contributing to your rental portfolio or your real estate assets, so that down the road you can have a nice retirement.
Yeah, Tim and I did different jobs before we got into real estate. And once our real estate took off, it helped us do the job we wanted to do, which was this. Yeah. So we always say that. People always think, oh, they can quit and just do real estate full time. You need a lot of capital for that, we'll be honest. Is it possible? Yes, it's possible, but you got to be fully committed. But better still, we'd rather give you the advice that real estate could definitely give you the job that you want to do.
Yeah.
Okay, next slide.
Okay, next slide. What can we do to get that crazy cash flow? Well, the number one thing you can do is add a suite. If you own a single family home that you're renting out that has an unfinished basement or just a basement, if it's set up the right way, if you've purchased it the right way with a bigger goal in mind, with the back door in the right place or the ability to suite it, the best way to generate extra cash flow is add a suite. And with some of the properties that we buy our clients, some of them require something as little as a small IKEA kitchen and some ceiling work to turn it into a valid suite. So by adding that suite, you can almost double your cash flow.
Yeah, I mean, adding a suite is perfect way to increase your cash flow. And you know what? It increases the value of your home as well if you do that. And for the young people that are on the call tonight, if you're thinking about how to get ahead, once again, go to our Crew TV and watch the videos on house hacking. I mean, we've got young people that are on their third, fourth property, Tim, just because they're house hacking. House hacking is when, excuse me, you buy a property, you either move into the basement and rent out upstairs or vice versa. And then that helps you save your money for your next deposit, for your next property. So house hacking is a must. And worst case, adding a suite is just going to give you extra income so you can make more money during these, interest rate hikes. And that's what this webinar is all about.
Yeah, and the next thing you can do is turn your property into a student rental. How do you go about doing that? If your property has 6 bedrooms in it, even if it's suited, it could be 3 down, 3 up. Yeah, what you can do is rent out the rooms to students. And we've seen the actual rental rate for rooms go to $1,000 and above.
Yeah.
When we started advising people to do student rentals, it was $500 a room. Yeah. So it's more than doubled in probably the last 3 or 4 years.
Yeah. A guy got in trouble just last month. It was in the newspapers that he was renting beds out for $600. I mean, don't do that. What this guy should have really done was if he rented to a couple or, yeah, it could have been a couple or two girls or whoever it was, then say, well, if you guys are two in a room, it's $1,200. Don't advertise a bed for $600. Like, that was the craziest thing I've ever seen. But at $1,000 per month, you know, an average rental team that we're getting roughly has 5 bedrooms, you would say.
Yeah.
So bringing in $5,000 per month on a property, I mean, it is a little bit more management, and we would advise you on how to manage the students, because the common areas can get a little bit, you know, you have to put up signs and stuff like that. Sometimes you have 2 fridges. There's a lot of things that we know what our investors are doing, but at $5,000 per month income, and I'm telling you, students don't have anywhere to live right now. So you guys think we're joking? $1,000, they'll be at your doorstep. I'm telling you, you could be making this money.
Yeah, I read an article in the Herald just the other day about this upcoming university year. All the residents at the U of C are full, so there's no place for these students to go. Some of them are planning on living in their cars until they can find a place to live.
Yeah, so $1,000 at $5,000 per month on a property, you can afford now to buy in the $600,000 range, $700,000 range, and still cash flow. And when you're buying in that price range, when properties go up, they go up like this, okay? Because they're normally next to the university, they're either near the hospital, and they're close to downtown. So they're great development lots for later on. So student rentals is the way to go. But Tim, just quickly talking about any properties right now with the percentage down, we used to be able to get people, Tim, come in, and we could still do it, but it's very hard to do right now. When you're putting 5% down, moving into a property and then moving out and you're using that as a rental, the numbers are so tight now with rental rates. We're encouraging our investors, if they have it, to put more than 5% down, 5, 10, and of course, if it is a true rental property, the banks want you to put 20% down.
Yeah, and if sometimes our clients are going to have to go to the joint venture route to get that down payment. And yeah, if you're bringing one thing to the table, which is the financing, you can qualify for the mortgage. If someone else brings the down payment, they're bringing the cash, why wouldn't you go into a joint venture with them and own 50% of the property? Azad always says this. I know it's oft repeated and it's getting, he says 50% of something is better than 100% of nothing. So owning 50% of that property gets you a start. Or if you've run out of capital, the banks won't give you any more money. Sometimes you're the money person and you own 50% of a property.
Yeah, and you're going to see this more and more. You're going to see people buying with friends. You're going to see people buying with family. I know back in Australia, Tim, the parents always help out there. They're either co-signing, right? And we do that here with our clients too, co-signing. There's a beautiful story about Brittany in our book, how she got started with investing in real estate. Her parents co-signed, and now, Tim, how well is she doing?
Yeah.
She's got a paid off property right now. So you can do it too.
Yeah, and it's not only investors that are doing it. You see some of these larger immigrant families that come into Canada, and a lot of multi-generations live in the same home. So your investors are competing with large families as well. So not only do investors do it, but regular families are doing it now too.
Yeah.
Okay, so we'll move on. Oh, we got one more question here. Can you advise some insurance company that has good coverage for multi-families in a house, or something that can cover if we want to rent our property per room?
Oof.
If you're renting per room, you can qualify for insurance, but you have to disclose that to the insurance company. And I know the cooperators did it.
We would have to get back to them on that.
Yeah, but I try the cooperators first. Other than that, we'd have to get back to you. We have to speak to some of our clients who still have student rentals. The thing is Alberta is really, it's a commuter province. So it's not like parts of the Maritimes or Ontario where you have these small cities with big universities in them. We have big cities with big universities in them, so the students can find different places to live. So we don't have as many student rentals as Ontario or the Maritimes, but we'll find out about that. Just send us an email and we'll find out which insurance companies do that. So moving on to the next one, how can you increase your cash flow? You can go to rent to own.
Yeah, so rent to owns, once again, the deposits for a rent to own, if you're renting out your property to someone who's eventually going to buy it off you, the deposits can be from 5,000 to 40,000. And that is a huge amount of money to keep you cash flowing through whatever you want to do. You could use that to go and buy other properties. So rent to own basically works. They put the deposit down, you have an agreed selling price within a time frame. It could be 1 year, it could be 2 years, it could be, the most we've seen is 5 years. And that agreed value would be a percentage of growth over the next 4 years. And that could be $100,000 more, it could be $60,000 more, whatever it is. And then they would give you a deposit just like they're buying a home, and then they would pay you above the rental amount. And that's called rental credit. So what happens if the property rents for $2,000, they may rent it for $2,500, and then that $500 every month gets added to their initial deposit. So at the end of the term, they may have $60,000, and you could do a couple of things with them. You could use that as a reduction in the sale price. So if the agreed amount is say 500,000, you may sell it to them at that time for 440,000. So there's a number of ways to go around it. All we recommend with rent to own is that the tenant buyer is actually working with the mortgage broker so they can qualify for that property at the end of the day. And the benefit to you is that you're getting that it could be $40,000 deposit up front, and it could be $500 rent credits, and you get that every month. So you're cash flowing. We've got clients that just buy property after property doing this. But once again, you want to make it win-win.
Yeah, so you have to be ethical about it and make sure that they are actively trying to qualify for that mortgage when the term is up.
Yeah, we love rent to own. Our investors really succeed at it. Sammy's just asking, are these webinars posted somewhere? Sammy, you're going to have to subscribe to our YouTube channel so you don't miss it, and it will be posted at a later date. That's Crew TV, just Google it. But rent to own is a way to go through these times, Tim. If you are struggling, if you know that if your property's coming up and the mortgage renewal is coming and the interest rate's going to be higher, well, that could be an option for you too, if the rents aren't going to cover it.
Okay, move on to the fourth one, the BRRR strategy: buy, rehab, rent, refinance, and repeat. We're seeing this come back a lot more. When the market is flooded with inventory, it's a hard thing to do. But right now, what we're seeing is people buy rundown properties that aren't so great, grandma's house, things that don't look that great, and using this strategy to sell or to refinance, a lot of cash out of the property.
Yeah, we're going to give everybody homework tonight to go on our YouTube channel. We interviewed Graham Jenkins. It's an interview. He's standing on his balcony. It's about 7 videos ago. And this guy is our hero on the BRRRR strategy because now he's on his 3rd one in the same building complex. That's nothing ordinary. Who built these condos?
They're old point of view condos.
Point of view condos, cheaply built, and he's made an absolute killing off these properties. And now working with us after 2 years, Tim, not even 2 years.
Yeah.
Okay, 2 years. He's mortgage free. Okay, so if you want to see the BRRRR strategy, but buy, rehab, rent, refinance, repeat, this is the name of the game, no matter which way you do it. It's getting that money out and going again and holding onto your assets. And once again, if you are in a situation like the fellow said in Edmonton, that property there isn't cash flowing. If it's not cash flowing, it's time to dump it, because in Edmonton, it's not going to go up like Calgary. No way it is. They don't have the demand. They just don't have that demand that Calgary has. And I don't see that changing anytime soon, just because of that.
Yeah, and the rehab portion, the second part of this strategy, we're seeing our clients, they don't have to rehab, they don't have to renovate these properties to the 9s anymore. Because the inventory is so tight, buyers are paying over list price for everything. You just need to renovate the properties to a standard that looks like show homes. You don't actually have to use show home quality materials. You can use stuff that looks like show home quality. So when the appraiser goes in there, he will appraise it as a renovated property. Now, the workmanship has to be good. Don't get me wrong. You can't just slap paint on the walls and say, hey, it's worth 50,000 more. But you can keep your costs down on the renovation part of it and because of the tight supply, you can easily find comparables that have sold for a lot more than when you buy this initially.
Yeah, exactly. The BRRR strategy is awesome. And don't forget, even if you're doing the boat, you can move into it, add value, refinance. You don't have to rent it out, because we have some people that don't want to be landlords, and you can still make money. We teach people how to make money even if they don't want to be landlords. So that's a possibility.
Okay, moving on to the fifth thing. This line here that we got from one of our good friends who actually is a part owner of this brokerage here. He does a lot of Airbnbs. He also owns a lot of rental properties. He's been in this real estate investment game for a long, long time. And we were discussing some clients that, were in negative cash flow a number of years ago.
Yeah.
And he overheard us and he came up to us and he said, if you're not cash flowing, you're not trying.
Yeah, we
thought that was the best saying ever.
We thought it was the best thing because we're going to go through times like this. Like, we went through the pandemic. Now we're going through interest rates. I don't know what's next, Tim, but you know what? We'll get through it. We always do. Property prices, if you look at the history of Calgary, it's grown by, Tim, it must be up above 3.5% the last 75 years.
Oh, yeah.
So anyway, we know the last 10 years, even with all what's going on, the market shifted roughly on average, I think it's 8% per year. So you know what? Calgary is a great city, but you'd have to calculate where you're at, and you would have to work out how you're going to get through this. And here are some of the things. Rent out a garage. A garage, Tim, we've seen them go upwards of $600.
Yeah, so if you're stuck, your cash flow is maxed out, then think outside the box and try to make extra cash flow from other things like renting a garage.
Yeah, renting a garage, you can get upwards. We've seen garages go for 600, 400, 200.
Even a parking pad. We've seen guys rent parking pads for guys to park their big RVs or trailers for the winter. They're getting like $250 a month for a parking pad.
Yeah, rent out rooms. Yeah, take a student in for a while, try it out for a semester. I don't know, do something there. Basement suites, we talked about that. Basement suites are awesome. I mean, at the end of the day, depending on your situation, you could take on a basement suite and get great tenants, right?
Yeah.
And it may cost you very, very little to put a kitchen in and get that rented. And then, we work with our clients to turn that basement suite into a legal basement suite. And then that could even we've created $50,000 to $80,000 in value just by adding a legal suite. Main floor suites, you could, if you're in a real crunch, you could move downstairs and rent out upstairs. And then you're even doing...
We've got a lot of young guys doing this. They're house hacking. They're living in the basement, renting out the top floor because they want to get ahead. They want to have their house paid off sooner. They want to make cash flow where they're living. We go through a number of videos about our young clients, and they actually go through the numbers. You just got to go to Crew TV and you'll see examples of these guys that are basically living for free. They've got two or three rental properties. All the cash flow they're generating is covering all their costs, and they're living for free. Yeah,
two-story homes with suites. Yeah, we see that. Tim, two-story homes now maybe rent the two-story part would rent maybe $3,000, and then down would rent for $1,500, right?
Yeah. So if you're in a crunch for cash flow, you got to do what you got to do. So if you're going to rent out that smaller footprint of a basement, then you just got to do it.
Yeah. Next one's Airbnb, $150 per night. That's what we're seeing from our clients. And we just had one in Bridgeland from Anil and Alana, who we showcased on the webinar tonight. They were rented 95% of the time so far. That's crazy because Tim, when we run our numbers on Airbnb, we only run it at 50%. They're at 95%. So they're doing extremely well, and that's a nothing special condo in Bridgeland.
But it's walkable to downtown, walkable to the zoo, to the Stampede grounds, to it's in the right location. That's why they're getting no vacancies. Rent-own. We talked about rent-own. You can turn your rental property into a rent-own property, earn $200 to $500 extra per month. To put you in a cash flow positive position. And that initial deposit, you will see people pay huge initial deposits because they can't qualify right now, but they know they can qualify for that home in 4 or 5 years.
Yeah, and then the last one, Tim's got executive furnished rentals. I mean, you could buy cheap furniture. You could actually take your furniture out of your house, put it in one of your rentals, upgrade your furniture, write that off, right? I shouldn't be saying that, but anyway, you could do all sorts of stuff, and then basically, you know what, you're getting more income.
Yeah,
And
so you got to think outside the box. When the market sort of conspires against us by interest rates going up really high, say vacancy rates go high in a different type of market, if prices start to fall, you need to think outside the box and rearrange your portfolio, rearrange your revenue and income sources so that you're still cash flowing, so that your whole real estate portfolio is still making you money.
Yeah.
The whole part of this game is just to give it your best. It's
yeah. Don't let the negatives outweigh the positives.
That's right.
Because the positives are absolutely huge, and they've changed our lives, and they've changed all of these people on our book that we wrote. So next one, Tim.
Yeah. So that brings our seminar to a conclusion for today. I'm glad a lot of people stuck it out to the end. We thought we would talk about crazy cash flow when interest rates are high, because that's what you need to do to survive these times. You need to rearrange your cash flow so that it is higher to cover your higher costs that the higher mortgage rates will bring to you.
Yeah, the next thing we want to talk about is our free ebook. It's downloadable on our website, crewrealestateinvesting.com. You simply just click on there, you download it. It's a great read. And if you are thinking of investing in real estate, it gives you the core fundamentals of what you should know before you get into it, like obtaining financing, understanding 3 rates of return, understanding property cycles, understanding just the basics of becoming a landlord, and then working with the right team to get you there. So we wish we had a guide like this before we got into it. We make our clients read it so they understand exactly where we're coming from, and they understand that you do need to be around like-minded people to succeed. And that's the killer thing that people don't realize, Tim, in real estate investing is, even myself, I've said it before, I don't sit around the table when I have guests over, especially now with barbecues, talking about real estate, because half my friends don't even care about owning real estate, or they own too much real estate, either or, right? So you know what? You got to be around people that are doing what you're doing and understand what you want to do and understand that they're going to get you there. If anyone else has more questions, yes, I'll put the link in there for the free book. I'll put it in now. Next one is our Fearless Real Estate.
Right here, this one. We wrote this book during COVID when we were kind of running out of things to do. And we got all of our client stories and threw them in that book. They're doing a million different strategies. They're going through success, a ton of different success. So if you do read that book, I find it inspiring. Yeah. And I just love the stories of the clients. Yeah, it's $20 and it's worth reading. I mean, Rich Dad Poor Dad changed our lives when we bought that book many years ago, and it didn't really give you any information, just got you pumped up to go do something. But this gives you the actual tools that you need to move forward. So that's definitely worth it. And then the next thing, this isn't, you don't have to do this. Our clients that do it though, really want to succeed at investing in real estate, be part of a network, be part of a membership that actually helps you get there. It comes with 100 hours of content. It's $97 per month. And the best thing about it, you can learn anywhere, you can learn on the go. There's a lot of templates that come with it, like JV agreements. The JV agreement alone is worth $350. It's got all of our forms from our landlord kit. And our landlord kit, if we were to assemble all of those forms, you could go online to different companies and buy all these forms, the leases, the move in, move outs, the screening questions, everything to get your property rented. We could probably sell that landlord kit for $500 alone if we were to sell that online. Yeah, and he says the book's amazing. And I think it took a while for you to get the book, and thank God you've got it. And thank you for the comments. So yeah, that course, there's no pressure to do the course. We don't really care if you do the course or not. We just want to make you successful. And if it takes coming in for a meeting, no problem. You come in and we want you to take action. That's what it's all about. The next thing that you should really do, and we've mentioned a number of times tonight, which is awesome, is go see what these people are doing, because they're actually doing it. They're doing what you want to do, and they're doing it the easy way. Yeah. And you go on there, they're real people, and
they're having fun. And some of these people though, Tim, have had some troubles here and there, and we don't hide anything. We tell you the good, the bad, the ugly, and it's all making these people money. So at the end of the day, that's why they all look happy.
Yeah.
like it's true. And then you hear it from them, you don't hear it from us. And it's awesome. We want you to do what these guys are doing. And once again, I know we put a lot of young people up there, but Tim, we have people that are retired that come to us to work.
Yeah, we've actually got a couple. They asked me just a while back about they're renovating one of their homes and they wanted to know what are the current trends. And they actually have a number of duplexes and fourplexes. They're retired from their day jobs and they're living off the cash flow. So it can be done. This couple's in their 60s. You can do it. You can retire on the rental income from your properties, but it takes a little longer. It's not going to happen in a year or two. So we do have older people that are doing it. We've got middle-aged couples that are doing it. We've got people from all walks of life, people from all different countries.
Backgrounds. New to Canada.
New to Canada. So just check out the interviews in Crew TV.
And that way you can see if it's for you. And you know what? At the end of the day, that course is there. We've done similar courses that have cost us $17,000. We didn't want to take money from people. We wanted to actually make the money at the end of the day.
Yeah. So that's what we have to deliver today. If you want to get a hold of us, if you want to book a one-on-one meeting with us, email or text. Email is actually the best way to do it. We will sit down with you in one of our boardrooms at our office, or if you prefer, we'll do it a Zoom call. But if you're interested in investing in real estate, by all means, contact us and we'd be really, really happy to get you started.
Yeah. So once again, our next seminar will be in 2 weeks' time. It's all about picking the right real estate investment strategy for you. We know that's the first step when you start investing. If you did like the presentation tonight, please go to work tomorrow. Tell all your friends about it so they can hop on board too. And you know what? We've seen people invite people to these things and then they end up buying properties together at the end of the day. So some wonderful things can come out of it.
We really hope that you can rearrange your portfolio or your revenue and expense streams so that you can make crazy cash flow. We don't care whether the market's going up or down, where interest rates are. You should be cash flowing with your real estate right now.
Yeah, thanks for joining in. And if you need any real estate advice, we get people asking us for values. We get people wanting to know what renovations they need to do to their homes to increase the value. Please just reach out. We love real estate and we hope to see you soon.
Bye-bye.